All right.
Boom.
We are live. As long as there's no echoing here. And we're good. Okay. Let me minimize this window. I'll be looking for my phone for any comments. Hello, everybody. Welcome to the Real Estate Think Tank for those of you that are new. And for those of you that have been with us inside this group for a while, welcome back. I'm glad you're all here and thank you for tuning in to us. I'm Jay Lopez, the owner of Jay Lopez Enterprises, and I'm here with Abdel Khawatmi. He is the owner of it's your own brokerage, right?
Correct.
Yeah, and for those of you that don't know, Abdel helped me purchase my home. He was my broker when I purchased my home 2 years ago. So he is very well respected in the industry, someone that I needed back when I was buying my house, because even though I work with a lot of lenders and realtors, it's very different when you're buying your own house. So yeah, we're here. He is very knowledgeable. He even owns his own school. I'm going to have him introduce himself and then get started right away. I hope that you guys learn a lot here. He always has amazing information to share. Please hashtag live if you're watching us live, and then hashtag replay if you're watching it on the replay. You can always tag us if you have any questions, and feel free to follow him and friend him on Facebook and Instagram. We'll leave his contact details at the end in a comment. So thanks, Abdel. Thanks for being here.
Absolutely. Thank you for having me. I appreciate it. I can't believe it's been 2 years. I feel like a part of me feels like, we live in the mortgage world. I say it's like dog years, right? Like 2 years in our business feels like 30 years ago. And then I still feel like I think I was in San Diego at a leadership conference when we were just getting your loan approved. And I still remember it vividly, like pacing the room, trying to like figure out guidelines and what are the various different avenues that we need to explore. And let me tell you right now, in current market conditions and demographic and clientele and everything that's out there, the audience is predominantly real estate professionals and real estate entrepreneurs and things like that. So I mean, I will tell you guys, it is all about creativity right now. It is all about communication, consistency, and stuff like that. Literally right before we started this chat, we were going over the transitions, right? So introducing myself again, my name is Abdel Khawatmi. I'm a mortgage lender, own Paramount Residential Mortgage Group, Got Mortgages. We're based out of Eatontown. We also have 3 satellite locations in Pennsylvania, Michigan, and Florida. So we stay heavily well-versed in those footprints as well. Michigan was one that I kind of fell into, which we'll kind of dabble into a lot of investors and what's happening out there because it's a pretty crazy market. But awesome company, only company I've ever been with, which speaks volumes to the industry. There's generally a lot of people who change hats and jump ships for various different reasons, sign-on bonuses, this, that. PMG has always been great to me, and we run a very tight ship. Same operations team have been with me since I first started. So we make sure our employees are taken care of. We make sure, most importantly, our referral partners like Jasmine, everybody around there, have accessibility to us, and we love to truly educate and share that insight. And I'll tell you that's probably one of the most thrown around words nowadays, right? Education. And that's by far the thing that I think this market is allowing professionals to get separated. You either, pass your exam, you barely flew by, right? And that's kind of coming out there now. It's understanding guidelines, it's understanding various different, every consumer is not the same. God gave us 2 ears and 1 mouth, and that was hard for me too, because I loved talking and not out of disrespect to tell the client shut up. It was just like, like I got you type of situation, until it took me obviously time and years where I'm like, well, let me hear the client out. Like, where are we at? What are the things that we need to look up for and things like that? And I think it's only allowed us to be that much more successful. We've been blessed with a #1 mortgage lender within our region. So we've been really good. Online exposure is probably one of my biggest facets when it comes to the business. digital marketing and digital lending. Jasmine's a huge part of that too. To make sure that we're having that exposure, make sure we're having the necessary omnipresence out there, right? We're relevant out there. We're building a relationship with our clientele, with our referral partners, and we're taking it from there. So yeah.
Awesome. Wait, how long have you been doing this for a while now?
So it's since 2017. So 6 years, and like I was saying, right, 6 years in this industry is like 6 dog years, which is like 50 years, but 6 years. So we caught it, prior to things getting crazy in like the end of 2018, where rates kind of shifted a little bit, and then obviously pre-COVID, and then during COVID, which knock on wood was great, and then post-COVID, and now the era of inflation and stuff like that. So a lot of different transitions that have truly occurred within the market. But we've been blessed to pivot and surround ourselves with the referral partners that are allowing us the ability to take care of our clients. So
we're also 6 years old. So we started in 2017 too.
yeah, it's awesome. It's crazy how times are truly flying by. It's the professionals again. You're seeing a lot of the same professionals, right? And it's always been like that, but I would say now more than ever, right? When we're placing our offers, when we're doing certain things, when we're hosting a lot of community events, I'm big on that. We're running into the same people, which is great, which is speaking volumes to the successful professionals and the successful entrepreneurs that are pivoting to doing certain things that you have to, right? We're all in, we're doing it, and we're blessed. So
awesome. I see people are coming in and out of here on the live, which is common. Hi Jenny, hi Gilmer. I saw Glenn Baker came in here. Hi Glenn, it's been some time, but yeah, if you guys are watching live, hashtag live, so we know you're watching on the live.
I love it. But yeah, I mean, I think today's topic for the agenda was going to kind of diving into a little bit more of hyper basics for mortgages, and then a little bit more for our sales professionals, some tactics when we talked about digital marketing and digital presence. When you're prospecting, I don't like saying cold calling, prospecting or lead generation, with the art of social selling, right? And utilizing that. So I will, if you can give me the rights to share my screen.
Oh, that's right. Okay.
And then, yeah, we will crank away.
All right. You are now it.
Boom.
Don't mind me as I drink my tea because I'm
no, not at all. I just had a quick protein shake, literally in my little glass, and I should have probably had a tea because this weather is brutal right now. But really quick, you could see my presentation. I love it. Okay, cool. So for those of you guys who are watching live, or those of you guys who are watching this thereafter, that is my QR code. That is my digital business card that will give you guys instant access to my contact information and a lot of educational information within there too. So a lot of different, I call it Loanopoly, a lot of various different tools and tricks that, again, we stay catering to clientele. So diving right into it, right? We were talking about the basics of mortgages, right? What do we look for? We were talking about when we were qualifying clients and stuff like that. And this is in a low interest rate market, high interest rate market, buyer's market, seller's market. It all really roots down to something that I teach within my mortgage school called the 4 C's, right? When you're getting qualified, what are we looking for? And we take a look at the first thing is your capacity, which many of us have probably heard before, called your debt to income. How much money do you bring in versus how much revolving debt do you have against you? Credit card payments, car notes, installment notes, potential child support, alimony, anything that is court mandated or anything like that reduces your qualifiable income. Now, depending on the loan program that you're looking to go with simultaneously, an FHA loan, which is not a first-time homebuyer loan, many people have that misconception. It's a Federal Housing Administration loan, which is generally taken advantage of by first-time homebuyers. But you can put as low as 3.5% down and borrow 56.9% debt to income, right? Conventional, on the other side, which is like the ugly duckling, right, so to say, is you could put as low as 5% down, but you can generally only borrow up to 45%, sometimes 49%. So think about that. So FHA, if you're a buyer who makes $10,000 a month gross, and you're a W-2 employee, you could qualify with $5,600 in total debt. If you're going conventional, you can only qualify for $4,500 in debt. So you see that difference. So again, those are instances where if I'm working with a client and home prices are a little bit higher, interest rates are a little bit higher, we got to keep those things in mind, right? We got to keep those things, not including any monthly revolving debt that would reduce it, reducing your qualifiable income. That's kind of capacity and overshot. Capital, where is your money coming from? Is it sourceable? Do we know where it's coming from? Is it seasoned? Is it sitting in the bank account when I say seasoned for a specific amount of time? Whether it's 60 days, whether it's 30 days. If you're receiving a gift, right? Someone's gifting you the money, a family member, your parents, wherever the case may be, we would need to also see where's the money coming from based on what's called AML, anti-money laundering laws, right? We need to know where's the money coming from. Has it been seasoned? We have a gift letter signed by the donors. We have various different documents that we request, like statements and transaction histories that are given to us, so we know where the money came in from and how did the money originate. Collateral is, what are you buying, right? What is the collateral for the home? Where is the house being bought, and simultaneously, is the house worth what you're buying it for, right? Which is generally why we would do an appraisal, right? We would want to know. We don't want to obviously not only just lend you $500,000 if the house is worth $400,000, obviously, but we also want to make sure that the house that you're buying is worth what you think you're placing an offer for, right? It's probably a whole nother session, right, Jasmine, that we could talk about appraisal shortages and those different avenues. But again, and then the last thing is credit. So credit is probably one of the number one things I would say outside of capacity that normally hinders consumers from qualifying, right? Now we do a lot of different stuff where we've done something called a rapid rescore, where if your credit is light, but you've